right. Yeah, this is just kind of a summary of sort of put together a flow chart of some of the key actions for all these deadlines that we've been talking about. So, if you receive when the claims agent receives the notice of claim, they immediately what needs to happen. Once you receive it, immediately and within 15 days, the insurer must pay or acknowledge the claim and provide necessary claims forms, instructions, reasonable assistance, begin an investigation. You are also required to disclose all policy benefits, conditions, etc., for first-party claims. And again, so this is just kind of, and again, here, receipt of communication from the claimant suggesting that a response is expected. When you're not sure if that's a notice of claim or not, as Alex mentioned before, kind of treat it as one. So immediately, or any event within 15 days, reply to that communication, acknowledge it, ask for more information if you need it, etc. And then again, here as well, immediately and within 40 days, or 80 days if fraud is suspected, either accept all or part of the claim, or immediately or within 30 days after that, tender payment. So sometimes we see that, right, that a claim has been accepted and then people are complaining, haven't been paid. Why haven't I been paid? It's taken 2 months and I'm still waiting for the check to come through. And sometimes, just because you've got binders, you've got different parties involved, you've got different countries involved, and it just takes a while for the money to get, to the right place. You have to keep an eye on those deadlines as well, because that could sometimes lead to complaints when they could have been avoided. And again, same here, request more time to determine all or part of the claim, and make sure you explain why and any additional information that you need within 30 days. And then every 30 days, again, make additional requests for more time or pay or deny, and then again, rinse and repeat. And then if you deny the claim, it should be in writing, and make sure you tell them the entire factual basis and cite to the policy provisions. State that the claimant can contact the DOI and include that notice language that we mentioned before. And then again, here's just the reminder to notify the claimant of the pending expiration of the statute of limitations or policy deadlines at least 60 days prior to the expiration of those time limits. Now this next section, I'm going to go through some special rules for certain types of coverage that are covered under the regulations for specific lines of business. So for automobile, there are some very detailed criteria and definitions, particularly in California. For a cash settlement for actual cash value, that must include all applicable taxes and one-time fees incident to acquiring ownership, and it must include license fees and other annual fees on a pro rata basis, even if a replacement auto is not purchased. If the lost vehicle is retained by the insured or the claimant, then the cash settlement must account for sales tax, salvage value, and fees for making the vehicle salvage status. Details of the salvage must be provided to the claimant upon request. For a salvage vehicle, you must give written notice of the requirement to notify the Department of Motor Vehicles that it's been salvaged, and that the DMV notice might affect the resale and insure value vehicle. If the insurer makes a total loss settlement on a total loss salvage vehicle, then the insurer or designee must provide proper notice and fee to the Department of Motor Vehicles within 10 days. You also have to, there's also a detailed description of what exactly constitutes a comparable automobile in the regulations, and that includes that it must be of like kind and quality, including based on the year, the make, the mileage, and model restrictions. And as mentioned here in brackets, there's been increasing detail about to amplify this definition in multiple subsequent amendments of the regulations over recent years, or not so recent, I guess 2004 still feels recent to me, but value adjustments, including betterment or depreciation, must be discernible, measurable, itemized, and specified with dollar amounts documented so that they understand why it's been adjusted. And the value must be determined in the claimant's local market area and have been available within 90 days of the offer. You have to document the availability, including the VIN number, stock or order number, or license plate number, if such information is available, and the contact details of the seller, so they can see that it's, it's a real value. It's not something dreamed up. However, the comparable automobile is determined, the cost of the comparable auto must be itemized and explained in writing at the time of the settlement offer. And there are also limitations on when a replacement automobile may be offered. You cannot request that a third party pursue their carrier if the liability and damages are reasonably clear. That it should be on your policy. The labor expense is not subject to betterment or depreciation unless otherwise specified in the policy. And the insurer is not permitted to require repairs at that repairs be carried out at a specific repair shop. You cannot suggest or request the use of a specific shop unless the claimant asks for recommendations or the claimant is given specific written notice of their right to choose. So you can say, here's a list of repair shops you may wish to contact, but you are free to choose any repair shop of your choosing. That's fine, right? But you can't say, here's our approved repair shops and you must choose one of these. You cannot advise a claimant that a vehicle inspection will occur at a date that is later than that required by the regulation. So any of the timelines that we were talking about earlier about when you need to get back to people or resolve a claim, you can't pick a date that's later than that. You have to try and make it happen as soon as possible. You cannot tell a claimant that the repair shop that they have chosen has a record of poor service or poor repair quality or any similar statements if you have reason to know that the statement, if you know or have reason to know that the statement is untrue, deceptive, or misleading, or solely based on whether or not the shop participates in a labor rate survey. You must provide a copy of the estimate to the claimant to repair consistent with accepted trade standards, resolve differences with the claimant regarding the cost of repairs. And there are 8 specific limitations on requiring the use of parts other than new original manufacturer's parts, including insurer warranty. You cannot require excessive travel for inspection or repairs. So in an urban area, in an urban area or population with 100,000 or more people, you can require travel up to 15 miles. Any other less populated area, you should not require travel of more than 25 miles. And the insurer must exercise any right of inspection within 6 business days of notice of the claim, and it's the same deadline for reinspection after a request for a supplemental estimate. Again, if you request photographs in lieu of an inspection, you have to request that within 3 business days of the notice of claim or a request for a supplemental estimate. And again, if you want to reinspect after photos, same 6-day rule applies again. Cannot require the insured or the claimant to supply the repair parts. And there's an auto body repair consumer bill of rights that must be provided verbatim, word for word, to every commercial and private passenger insured, including named insureds at renewal, in at least 10-point type. And you must provide notice that the insurer will reopen a claim file if the first party insured is unable to purchase a comparable automobile for settlement amount within 35 days. And finally, must pay reasonable towing and storage charges and must provide reasonable notice before terminating any storage payment. You can't just reach the limit and then stop paying. You need to give notice that you're going to stop at a certain point, but they can make alternative arrangements. And then this is about a standardized auto body repair labor rate survey that the commissioner recommends that insurers use as a basis to settle or pay automobile repair insurance claims. You can pay a labor rate lower than the prevailing auto body rate if the shop chosen by the claimant charges a lower rate than the prevailing auto body rate. The compliance survey results in a rebuttable presumption that the insurer attempted in good faith to effectuate a fair and equitable determination. And it's only valid for up to 12 months after filing with. Cannot use data over 16 months old, subject to some very detailed potential exceptions, including inflation adjustments. The insurer must send a survey questionnaire to all auto body repair shops registered with or licensed by the Bureau of Automotive Repair as an auto body and or paint shop. But you can only use the rates of respondents who meet very specific equipment requirements. And prevailing auto body rate or prevailing rate becomes the labor rate at or below which a simple majority of surveyed shops charge in a specific geographic area. You must exclude discounted rate negotiated or contracted for with members of any direct repair program. Finally, there's detailed parameters of what constitutes the valid geographic area, including geocoding, tiebreakers, and periphery limitations. And a standardized labor rate survey must utilize the questionnaire as set forth under statute with very limited customization. Thank you for bearing with me through that. I know not all of you write this kind of business, but we are required to go through it. There are also special standards for replacement cost property policies. You have to replace all items within a damaged area so that all are reasonably uniform. And you cannot require, and there are restrictions on referring the use of repair entities similar to under the auto regulations. So for example, if the insured requests, or if they're notified in writing that they can choose whoever they want to repair somebody, then, or sorry, to repair their property, then you can recommend a list. But bear in mind that if the insured chooses a repairer that you have recommended, then the insurer essentially becomes the guarantor of the price and quality. So you can't then turn around and say, no, I'm not going to pay for that to have repaired that, I don't know, antique automobile or whatever it may be that was, damaged in a recent landslide because the repair shop that I recommended charged too much or didn't do a good enough job or something like that. You've recommended it, so you're kind of stuck with that, so bear that in mind. Documentation and resolution of estimates is required, again similar to auto. And finally, the appraisal process is limited by the standard fire policy terms under California Insurance Code section 2071. So that is the statute that many states have. I think about 35 or so states have what's called a standard fire policy law that was based on, I think that was the New York law from 1920-ish, that basically says if you are insuring the peril of fire, you have to follow this form. And you can provide something that's more beneficial than that, but you can't provide anything less beneficial to the insured than what's permitted by statute. And so again, that standard fire policy provisions in California include an appraisal process that you have to follow. For first party property, if there is an adjustment due to betterment, depreciation, or salvage, you must document the justification for each line item of such adjustment, such that it's discernible, measurable, itemized, and specific. And you have to fully explain it to the claimant in writing. If they are repairing or if you are repairing or replacing the damaged property with like kind and quality, then the measure of recovery is determined by the cash value of the damaged property. And labor cost is generally not subject to depreciation or betterment adjustments, again, as we said before, unless this policy specifies otherwise. Then, as we said at the upfront, there are special rules for surety insurance, providing which should be obvious here, but there's no discrimination permitted based on the claimant's age, gender, income, religion, language, sexual orientation, ancestry, national origin, or physical disability, or upon the territory of the property or the person insured. Interestingly, race is not listed here, but I would probably still include that. If for no other reason, because it would be prohibited in the UK. So denials must be specifically explained in writing, and you have to provide notice of the deadlines. The principal's absence, non-cooperation, or denial of liability is not a defense to not paying the claim. And you have to pay within 15 days of establishing liability. And again, as the general regulations provide, that you cannot have any unreasonably low settlement offers. There's also special rules for life and disability. Now, this market is not permitted to write life insurance, but you can write disability insurance, which is both disability income insurance, as well as in California, disability is the word they use for health insurance. And they do allow certain types of, for example, international major medical insurance to be written by surplus lines insurers. So I'll go through these. There can be no recouping any overpayment and underpayment unless it's documented in the file and the insured agrees, or a mistake is caught within 6 months and there are no factual disputes. You have to provide an explanation of the benefits with the payments. And there's no penalty for failure to comply with pre-certification of benefits requirement unless these penalties are clearly specified in the policy. So you can't penalize for somebody for that if you haven't warned them about it. 30 days from the original notice to accept or deny claims. You have to provide 30 days with rolling 30-day extensions as if you need more information. You have to approve pre-authorization for non-emergency services immediately, but not more than 5 calendar days in any event. And again, as Alex mentioned before, of course, there's no pre-authorization for emergencies. You have to provide reimbursement for copy charges that are incurred at the insurer's request. So if you ask for a copy of their medical records, 30 days to affirm or deny after contesting a claim. And then workers' comp, as I said, I'm not going to go through this only because this market is not permitted to write primary workers' compensation insurance. But if anyone writes it on an excess basis, you may want to have a read through that for your information. Finally, favorite slide, just kidding. But penalties. So why do we care about this apart from the fact that California says that we have to? They do have, as I mentioned earlier, while they no longer have the ability to directly prohibit surplus lines insurers from writing business in California, they can issue fines. And there are fines of $5,000 to $10,000 per initial act is the potential scope there. The department gets to decide what constitutes an act, and that's pretty typical in state law. These kinds of penalty statutes are drafted very broadly because they're remedial in nature, and they want to try and encompass as much potential malfeasance as they can. So they want to make sure that the regulators have the authority to impose whatever fines they need to impose. And so, acts could be things like how many days, an impermissible policy was enforced. So obviously not it's like how many claims are we talking about, but also how many days did they extend, do they miss a deadline by, or, other things like that. There's no definition of what's an act. $5,000 to $65,000 per each act if the department has already instructed the person to cease and desist from whatever it is whatever violation they've committed. So I'm sure none of you would ever continue to do something that the department told you not to, but just saying, have to mention it. And then a single act is punishable if it's knowingly committed. And that includes actual, implied, or constructive knowledge. So if that includes that they, you should have known, right? The constructive knowledge there, had the ability to know. So willful acts can escalate penalties, and it simply requires a purpose or willingness to commit to the act or make the omission. It does not require a willing intent to violate the law or injure anyone or to acquire any advantage. So that's another that's important to keep in mind. Finally, the criteria for penalties that the department will consider in terms of determining whether to issue one, and also how severe the penalty will be, is they'll consider the existence of any extraordinary circumstances. We've mentioned a couple of times here and there that, of course, if there are extraordinary circumstances that prohibit you from meeting a deadline, that the department will take that into consideration. If there is a good faith and reasonable basis to believe that the claims are fraudulent and they are reported to the department. So if you've missed some deadlines, but then it's because you were trying to investigate whether there was fraud going on, they will again take that into consideration. The complexity of the claims involved, if there was a gross exaggeration by the claimant of the value of the property or the severity of the injury or amount of damages, a substantial mischaracterization of the circumstances surrounding the loss or the alleged default of the principal. So again, if you're having to do a lot more investigation, right? Because this kind of comes into similar to the fraud basis that you're having to do a lot more investigation if the claim that was filed is just grossly disproportionate. So secreting of property by the claimant, which has been claimed as lost or destroyed. So again, they'll take that into consideration, that it potentially took you longer to discover that they've actually hidden their Picasso under their bed. The relative number of claims where the acts are found to exist, and the total number of claims handled, and the total number of claims reviewed by the department. So again, they'll take into consideration that this insurer writes millions of dollars worth of business in this state. We've had, very few complaints about them ever. We've looked at X number of their claims files, and we've only found a couple of violations. This really looks like a one-off. They'll take that into consideration. Whether the licensee has taken any remedial measures to prohibit the violation from occurring again. The existence or non-existence of any previous violations. So this is where it's important, for things like what I mentioned earlier about the 21-day rule and not having justified complaints. They'll look at their record of how often am I coming across this insurer? What have I seen before about their compliance with these regulations? The degree of harm occasioned by the non-compliance. So maybe they were a day late, but everyone still got paid, everyone's happy. Maybe they won't be too upset about it. Whether under the totality of circumstances, the licensee made a good faith attempt to comply with the regulations. The frequency of the occurrence and or the severity of the detriment. Whether the licensee's management was aware of the facts that apprised or should have apprised the licensee of the acts, and the licensee failed to take any remedial measures. So, if they realize that there was a violation likely to occur if they didn't respond within a certain period of time, and they could have taken steps to make sure that happened. The licensees reasonable mistakes or opinions as to the valuation of property losses or damages. So again, if there's a reasonable reason that they've disagreed, the property inspector made a mistake in reporting the square footage of the property, and you quoted your claim value on that basis. And so that led to an unreasonably low settlement offer. But when pointed out, you went ahead and fixed it. Those kinds of things you'll take into consideration. And that is our last slide. So I don't know if anyone has any questions in the remaining sort of 15-ish minutes. But
yeah, thank you, Andrea. And thanks, Alex. There's a huge amount of content to get through there as ever. So thank you so much for taking us through it expertly as always. So if you do have a question, now is the time to pose it. You can use the Q&A facility that we've got within the platform. And just while people consider if they have anything to raise, something from my side for you both, you've mentioned the department's increased focus. Are we expecting that they will continue putting insurers under the microscope in the coming months? Just asking you to perhaps get the crystal ball out and see where you think this is going.
Yeah. Well, I wish I had a crystal ball, but I think, Tom, if I had to guess, I would say yes. Not just in California, but really, any state in the U.S., particularly any state that's having a significant degree of catastrophic events, as we're seeing, unfortunately, in the past couple of weeks. But I think, with the increasing volume of surplus lines business that's being written in the US these days, and so more and more business coming from this market, and more US admitted insurers pulling out of markets, and people having difficulty finding coverage. I think there's more business flowing to the surplus lines market, and I think some, particularly where, say, the California regulators might see that business that was previously written by admitted insurers who then couldn't get their rates approved, because that's a kind of an ongoing issue in California of significant delays in getting filed rates approved in California. So to the extent that admitted insurers either aren't willing to write or aren't able to write because they don't have approved rates or have pulled out of markets, there's more flowing to the surplus lines space, and therefore regulators are seeing surplus lines players more in areas where they're used to dealing with admitted insurers, and so they might be more likely to apply some of these kinds of standards to the surplus lines market, maybe without the context of the fact that, of course, we're thousands of miles away from California, and there's many different players involved in the chain between us and the insured. So I think that's definitely something where we're going to keep seeing these kinds of requests and issues. Definitely, there's only ever more regulatory actions.
Absolutely. Alex, does that tally up with what you're seeing at the moment?
Yeah, I think that's exactly right, Tom. Often in the U.S. press, after stories about the major events that come through, you see stories about the insurance coverage or lack thereof after the fact. So the regulators are definitely clamping down and are paying attention to the insurers in the markets and how they're acting and behaving. So I think you are not going to see a decrease in regulatory and oversight.
That's pretty clear. Okay, thank you. Fantastic. So we don't have any other questions. So what I will encourage everyone to do is when you go away, if there are any points that you reflect on from the presentation or any other issues or queries that arise, you have Andrea and Alex's details on screen there, and they will be in the slide deck that are circulated. Now, if you have any questions about certification, accessing the recording, slides, anything like that, please do feel free to direct them to either myself at tom.hughes@iua.co.uk or our events manager, Deb, at deborah.finch@iua.co.uk. And I'm sure you've all received plenty of emails from Deb, so feel free to reach out to her directly. Now, in terms of the slides, the recording, please do give us a week or so just to finalize those and to get them sent out. And the same for the certificates. We'll have something like 125 to issue, so it will take a little bit of time to work through those, but they will eventually land on your virtual desk with the sign off from Andrea and Alex from MWE. Okay. Well, Andrea, Alex, is there anything more that you would like to add before we close off?
Nothing more from me. Thanks, Tom.
No, nothing here. Thank you. And thank you, everybody.
Yeah, thanks everyone.
Yeah, absolutely. And the last thing I will say is that we will be holding one further event this year. Andrea and Alex are back by popular demand because we couldn't quite fit into everyone's calendars. So we'll be sending out some details for a session in December. So if you do have any colleagues that need to undertake their training this year, please do send them in our direction and point them towards that event later this year. Now, with that, I can concur with Alex and Andrew and just pass on my thanks for your time and involvement. And we look forward to seeing you hopefully at the next session. Well, if not the next one, then 2025 when we continue this training. Thanks, everyone.
Very good. Thanks, everyone.